What's going on, everybody? Ryan Thompson, the Assumable Guy. This is the Assumable Guy Show. Today we're talking about something every buyer asks me before they pull the trigger on an assumption. What are the closing costs? What am I actually paying when I close on one of these? If you've been thinking about assuming a mortgage but you're not sure what to budget for, this one's for you. Let's get into it. So here's the quick background. When you go get a conventional mortgage, your closing costs are typically 3 to 5% of the purchase price. On a $450,000 home, that's $13,500 to $22,500. And that's on top of your down payment. That's a lot of money just to get the loan set up. You've got origination fees, discount points, appraisal fees, underwriting fees. The lender is charging you for the privilege of giving you their money at 6.5%. Think about that for a second. Now with an assumption, the cost structure is completely different. And this is the part that surprises a lot of people. You're not originating a new loan, you're stepping into the seller's shoes. So a huge chunk of those conventional closing costs just disappears. Let me walk you through what you're actually paying. First, the assumption processing fee. This is the one that's unique to assumptions. It's the fee for the company that manages the assumption paperwork between you, the seller, and the bank. It ranges from about $550 per side on the low end to about 1% of the purchase price on the high end, depending on the level of service. And I promise you, this fee is worth every penny. These processors hold the bank's feet to the fire. They know what documents the bank needs. They know when the bank is stalling, and they know how to push the process through. I don't do any of these without an assumption processor ever. Second, title insurance. This one's the same as any real estate transaction. You're protecting your ownership. On a $450,000 home in Colorado, you're looking at roughly $1,200 to $1,800 for an owner's title policy. Standard stuff. Third, recording fees and transfer taxes. These are county fees for recording the deed and the assumption with the county. In Colorado, we're talking a few $100, maybe $200 to $400 depending on the county. Nothing crazy. Fourth, prorated taxes and insurance. When you close, you'll settle up the property taxes and homeowner's insurance with the seller based on the closing date. If the seller has already paid the full year of taxes, you reimburse them for the months you'll own the home that year. Same with insurance. This isn't really a cost so much as a timing adjustment, but it shows up on your closing statement. Fifth, the escrow setup. If the existing loan requires an escrow account for taxes and insurance, you'll fund that at closing. This is usually 2 to 3 months of reserves. On a typical Colorado property, we're talking maybe $2,000 to $3,000. So let me add this up for you. This is where it gets real. Assumption processor, let's say $2,500 on the higher end. Title insurance, $1,500. Recording fees, $300. Escrow setup, $2,500. Prorated taxes and insurance. Let's call it $1,200. Total closing costs on an assumption, roughly $5,000 to $10,000, right? That's the range I see on most of my deals. Now compare that to conventional. On the same $450,000 home with a new loan at 6.5%, you're paying $13,500 to $22,500 in closing costs. Plus, you've got that origination fee, which is usually 0.5% to 1% of the loan amount. That's another $2,250 to $4,500 by itself. So the assumption saves you anywhere from $5,000 to $15,000 just in closing costs. Before we even talk about the rate savings, before we even get to the monthly payment difference, just the closing costs alone. Now I know what you're thinking. Okay, Ryan, but what about the appraisal? Don't I need an appraisal? Here's what most people don't realize. Most assumption servicers do not require a traditional appraisal. You might need one if you're getting a second mortgage to cover the equity gap, because that lender will want to know what the home is worth. But the assumption itself, the bank already has the property on their books. They already know it. So that's another $500 to $700 you're not paying compared to conventional. Here's a little hack for you. In a lot of our deals, we negotiate the seller to cover the assumption processor fee or give concessions that offset most of these closing costs. I had a buyer recently who got into a home at a 2.99% rate on a $430,000 property. Only $16,000 down to cover the equity gap. Plus, we negotiated $1,000 in concessions from the seller, $1,000 back at closing. So the effective closing costs were even lower than what I just walked you through. And that's a sweet deal, right? a 2.99% rate, $16,000 down, minimal closing costs. Compare that to going out and getting a brand new conventional loan at 6.5% with $15,000 or more in closing costs, plus a 20% down payment. There's no comparison. Now, sellers, here's what this means for you. When a buyer assumes your mortgage, they're saving thousands in closing costs compared to getting a new loan. That means the buyer has more money available. They can be more flexible on price. They can bring a stronger offer. And when you market your home as assumable, you're attracting buyers who understand the math. These are educated, motivated buyers. Colin and Beth marketed their property as assumable and got multiple competing offers that drove the price up. The assumable rate didn't just attract assumption buyers, it attracted everyone. I want to make this super clear for the buyers listening right now. The total cash you need to close on an assumption is the equity gap plus about $5,000 to $10,000 in closing costs. That's it. No origination fee, no discount points, no junk fees from the lender trying to squeeze an extra $800 out of you for an underwriting review or a processing charge. The cost structure is clean. And here's something else. If you're using a gap loan from one of our partner lenders to cover the equity gap, those closing costs are usually built into the second mortgage. So you're not coming out of pocket for two separate sets of closing costs. Your lender handles the gap loan closing costs as part of that loan. So the bottom line, conventional closing costs on a $450,000 home, $13,500 to $22,500. Assumption closing costs on the same home, $5,000 to $10,000. You're saving $5,000 to $15,000 at the closing table, and you're getting a rate in the 2s or 3s instead of 6.5%. The math is not even close. If you've been holding back because you thought assumption closing costs would be some mystery number or some hidden trap, now you know. It's straightforward. It's cheaper than conventional. And we walk you through every line on that closing statement before you sign anything. Let's go find you a sweet rate. I'm Ryan Thompson. This is the Assumable Guy Show. If you want to see what's available, hit up assumableguy.com or DM me on Instagram at the.assumable.guy. I'll run the numbers for you. No pressure, just math. Next episode, we're getting into whether two people can assume a mortgage together and why that opens up doors you probably haven't thought about. See you on the next one.